is next. We start off this segment on the global oil market as prices rose in early trade today, reversing earlier losses and extending their rally into a sixth session amid continued concerns over tight supply at a time when demand is picking up with the easing of COVID-19 pandemic. Brent crude futures gained 42 cents to $79.95 a barrel and actually hit $80 a barrel this morning, reaching its highest since October 2018. It surged 1.8% on Monday. U.S. West Texas Intermediate crude futures climbed 41 cents to $75.86 a barrel, hitting its highest since July. It jumped 2% the previous day. Boosting investors' risk appetite, Goldman Sachs raised by $10 its year-end forecast for Brent crude to $90 per barrel. Global supplies have tightened due to the fast recovery of fuel demand from the outbreak of the Delta variant of the coronavirus and Hurricane Ida's hit to U.S. production. And for more on the oil market and other issues on the commodities market, we have Damilola Akinbami, Head of Research at Financial Derivatives Company. Hi, Dami.
Good morning, Chimeze.
Good morning. Good to see you. How are you doing?
I'm doing well.
Well, we have seen improving global demand and, of course, the supply tightening, particularly in the U.S. now pushing oil prices up. Of course, this morning we saw that hitting $80. And that should Nigeria really be excited considering commitment to the OPEC quota?
Yeah, so for Nigeria, it's almost like a double-edged sword. And by that, I mean that, okay, definitely we stand to benefit from higher oil prices. So because oil accounts for over 70 to 80% of our forex earnings and even fiscal revenue. But unfortunately for Nigeria, we are yet to ramp up our production levels. As at August, Nigeria was producing about 1.2 million barrels per day, according to OPEC's monthly oil market report. So definitely, if you look at that, because if you're considering oil revenue, you have to look at both the price and production aspect. So the higher oil prices right now, we might not necessarily feel all the impact because of low production
Nigeria is actually
levels.
struggling to even reach the OPEC quota, because a recent report had called out Nigeria and Angola struggling to boost output to their OPEC quota levels, and because of underinvestment and, of course, nagging maintenance, problems.
Yes, so even the federal government has the plan to actually ask for an increase in the country's production quota at the next OPEC meeting or OPEC Plus meeting, which would
But if we are not even meeting up with the cut, what they have given Nigeria already.
Yeah, so according to the government, they said that they're addressing some of these challenges that are affecting Nigeria's oil production, industrial oil production, basically, obviously, technical disruptions, pipeline vandalism, underinvestment. So according to the federal government, some of these technical issues are being resolved, and that's why they're asking for it. But before you could even ask for an increase, why don't you try and reach where you're supposed to be, first of all? So definitely a lot of things need to be put in place. We know the Petroleum Industry Act has been, it's now a law, it's now an act. So definitely we expect that to have a positive impact on the industry. We know that there's still a lot of issues surrounding that act and both legal issues and what have you. So these things need to be addressed. I mentioned that it's a double-edged sword for Nigeria. So on the flip side, higher oil prices, because Nigeria imports all of its refined crude. So the more oil prices increase, the more the landing costs would increase. And right now, if you have oil prices trading at above $80 per barrel, you can see the landing cost increase to almost 400 naira per litre. That means, and that's about 140% above the current retail price of petrol now, which is at 165 naira a litre. And if you look at what constitutes the landing cost, definitely oil prices, the exchange rate, and we know that the Naira too has been falling in the last couple of days. So for Nigeria, this is very significant, because even the NNPC recently released a report that the country has spent almost 1 trillion naira on subsidy petrol subsidies in the last 8 months. That is significant.
And the way it's going, it's quite inevitable.
Yes.
And I mean, taking it out
yes.
is quite inevitable.
And the negotiation between the federal government and Labour, well, is yet to bear any fruit, so we don't know where that is heading. So the more oil prices continue to increase, the weaker our currency gets, definitely it would impact negatively on the country in terms of higher fuel subsidies. And this even it's also important in a sense that while we're all talking about oil prices rallying and what have you, the green revolution is picking up steam. We know that President Biden last month had said that he's targeting a 50% electric vehicles. Most of the cars in the country will be at least 50% electric vehicles. We know that Ford, which is a U.S. car manufacturer, has also announced about an $11 billion investment into the electric vehicle industry. We know that Europe, too, they're also focusing on green revolution, China. So a lot of countries are shifting towards this electric cars and green revolution. Meanwhile, Nigeria is still talking about oil. So investment is shifting away from oil into electric vehicles. So it gets to a point where the demand for oil would fall.
But some analysts will tell you that, well, we'll still have oil for a very long time.
Yes, so for instance, now this in the short term, and by short term I mean temporary period, so maybe next 1 to 2 years, definitely oil prices, especially if the market fundamentals are in favor of rising demand. So we may see oil prices continue to trade around $80, maybe even 90 by the end of the year, especially even as you're moving to the winter season, so temperatures will fall, so there will be increased demand for gas and what have you. But then in the medium to long term, the oil is going to get more obsolete, and as the demand for oil falls, investments too will decline. We know that a lot of major international oil companies are already divesting their assets away from Nigeria. So as investments reduce in the global oil industry, supply too will be affected, and that would also definitely oil prices, now that we're seeing $80, $90 per barrel, oil prices in the medium to long term might not be where they are. And Nigeria has to double down on the diversification efforts in terms of the revenue base and reduce its dependence on oil.
Yeah, now talking about green revolution, of course, we saw a report by McKinsey yesterday saying that Africa needs about $2 trillion for green manufacturing. Of course, that means manufacturing companies moving away from fossil fuel.
Yes.
First, Africa does not even have the funding.
Yes, so it just further reemphasizes my point that the world is focusing more on the green revolution. The world is focusing more on electric vehicles. Even Africa, rather, as a continent that has this low green industrialization process and whatnot, McKinsey conducted that report and said, oh, for the African countries to switch from fossil fuel factories and industries to the green revolution, to having more electric vehicles and cleaner energy, they will need that amount of infrastructure. And because we are coming from a low base, it will be easier for us to switch to low-cost carbon emission factories and what have you. So again, it just boils back to the point that the Nigerian government their thinking has to change from oil, because the world is moving. The world
so
is moving.
How do you link this, I mean, this report, to what we're seeing now happening, particularly in Europe with the energy crisis and even in China?
Yes. So what is happening in Europe right now, the energy crisis, is a result of low inventory levels, again, because of the shift to electric vehicles. So Europe wants to be at the forefront of it all, and being the first person to achieve such a milestone, definitely you'll be the first to face the headwinds. So it's just like a warning signal to other countries, like this is what is likely to happen. And because of this crisis, these low inventory levels, and also Asia, we're seeing an increase in their own demand and whatever. So that's why we're seeing energy prices increase, and even a lot of governments of European countries are already warning of a possible shutdown of factories and power outages. Yes, occurring.
We already experienced such here, so I mean, it's not going to be any news.
No, but it's important. Why? Because one, this green revolution, because gas prices are becoming more expensive, a lot of governments may be forced to now start start purchasing fossil fuel, which would undermine the Green Revolution strategy. 2, Europe is Nigeria's second largest trading partner by continent. So if factories start to shut down, output is affected, that is inflationary. We could see prices of commodities sold in Europe increase. And because it's a major trading partner of Nigeria, that could filter into what we import from this country. So it's a major issue. And if you even look at gas prices now trading at over $5 per MMBTU.
You can see what's happening in the UK.
In the UK also. Yeah. UK, in addition to rising gas prices, they're also having shortage of truck drivers and whatever. So
that's because of the Brexit issue.
Exactly, because of the Brexit issue, and that coming up with temporary visas for foreigners to come, at least even if it's a 3-month visa and whatever, to try and address that issue. So this, we're already seeing that it would spill over to various countries in the UK. I mean, the UK is experiencing it, European countries too are experiencing it. So it's a major issue. But for Nigeria, higher gas prices, we stand to benefit from that also, because gas exports accounts, or accounts for about 12% of our exports.
Yeah, so do you see this, I mean, the rise in the LNG that we're seeing supporting oil prices?
Yes, so if gas prices are increasing in the international market, it would help to also boost our revenue from oil and gas. It would also help to boost our fiscal revenue and our external reserves. So we have oil prices increasing, we have gas prices increasing. So Nigeria stands to benefit from increased export earnings. But again, we also import. So that's the unfortunate thing. As much as we export, we're also very import dependent. And we know what's happening right now with liquefied petroleum gas, which is what we call cooking gas. The price of a 12.5 kg cylinder is over 7,000 naira now. So because gas prices are increasing in the global market, is filtering down, because despite the fact that we produce the natural gas, but we also still import the LPG to meet local consumption.
Right. Now, of course, talking about the outlook for the oil market, Goldman Sachs is saying about $90, and it could be possible. I mean, we're seeing $80 as it is now, but for you, perhaps you're seeing $100, isn't it?
Well, right now, we could see oil prices trade towards 90, maybe even 100 before the year runs out. And with what is going on right now, because the market dynamics right now, that's showing what we have in play right now is a supply deficit. So we have tight supply as a result of the impact of the Hurricane Ida and even the tropical storm Nicola. So that shot in about 30 million barrels of U.S. crude inventory. So supply is not rising as fast as the demand recovery, and because of the increased vaccination rate and more countries, more economies are reopening. The U.S. recently opened its airspace to European airlines. So that increase in demand, it far outweighs even OPEC plus monthly increase of 400,000 barrels per day. So we expect that this will continue. The major threat right now is if another variant of the COVID virus occurs, which would now render the vaccines.
We don't hope that happens.
Well, that's it. So that's the only major clause. If not, because again, we're entering into winter, the winter season, and during winter, obviously, there's increased demand for gas, there's increased demand for crude, for heating. So that definitely would also feed into higher oil and gas prices.
All right, let's look at our FX market. We have seen the Naira gradually moving from 410 at the NAFEX
the I&E window,
to about 415. Yes. Now, do you see this as a gradual convergence, between the parallel market and the official market?
What we are seeing right now is what we call a crawling peg. So it's moving in a cobweb through method or movement. So like a cobweb, we know the spider's cobweb, it keeps going in a concentric pattern until it gets to the middle. So for the Naira, for the Forex market in Nigeria, what we are seeing right now is that concentric movement. So we've been seeing the CBN gradually shift or move the I&E window in a crawling peg method from 410, 411, 412, now it's at 414, 415. Meanwhile, we've seen the parallel market appreciate, albeit slowly. So we're gradually going to see or get to a point where we would come to a convergence. So if the CBN increases its forex supply at the I&E window and the price continues to move, then we might start to see that happen in the forex market.
All right, thank you very much, Damilola, for your time this morning.
Thank you, Chimizi, for having me.
I appreciate it. Damilola Akinmami is the head of research at Financial Derivatives Company. We'll take a moment.